Good morning, good morning, everyone. Welcome to our webinar today. If you can hear me clearly, just in the chat box, you can give me a thumbs up, so that I can be sure that I'm not talking to myself or I'm not audible enough. So yeah, in the chat box, give me a thumbs up, or I can see that someone has confirmed. So welcome to today's webinar, and Leo will be talking on taxation of the wholesale, retail, and the informal sectors. So basically, today's webinar is going to be a little bit more relaxed, in the sense that it will be as simple as possible, so that not only will it be relevant to tax practitioners and auditors, but also to the very people who are involved in those sectors. So if you're in the wholesale, retail, or even in the informal sector, or you know someone who can benefit, please forward them the link so that it can be mutually beneficial. Because as we are told time and time again, that ignorance of the law is no defense. So that is why we decided to come in handy and educate the people, educate the taxpayers, educate the business people who are in the wholesale, retail, and informal sectors on the taxes that affect those sectors and anything that involves KRA. So karibuni sana, karibuni sana. So in case of any question, you can ask in the chat box. I will answer some of the questions, and also we have a very, very able co-hosts who will answer your questions very promptly as they come. And in case of any emphasis, I will emphasize on anything that needs clarification. So karibuni sana. The link, the recording will be shared later. And also, in case of any queries or want to reach out, a link will be provided for you so that you can engage. Karibuni sana. So this is the sad reality, or this is the reality of the ground. Running a business in Kenya today is like basically dating KRA. So first of all, they'll want transparency, they'll want commitments, they'll want receipts, they would want even daily communication. But still, they will not trust you. It is a necessary relationship, but it is not getting any easier. So I really hope that as time goes by, the relationship will be more trustworthy. I really do. I don't know when Kerry will decide that. So to today's objectives. So today we are basically going to try to understand the taxes that affect the wholesale, retail, and the informal sectors in Kenya. We are going to understand how the Finance Bill of 2026 affects those businesses, or rather the impact of the Finance Bill of 2026. We are also going to look at some of the major triggers that will trigger KRA to look into your affairs as a business. And also we'll try and learn some tax planning and risk management strategies. Also, without fail, we are going to look at a little bit of e-teams. I know in the previous webinars, we have had a lot of webinars on e-teams and e-teams compliance from Dr. Regina. And still, we are not going to cease, because in the recent times, the success of your business entirely depends on your compliance on e-teams. Also, we shall look at importance of documentation and some internal controls, and also how to avoid costly disputes and penalties. And also we shall look at at a case study that will try and bring the point home. So if we start with wholesale, so these are basically businesses that purchase goods in bulk and sell them to retailers and institutions. Some of these are FMCGH distributors. FMCGH basically means fast moving consumer goods, which are basically foodstuffs and other household utilities. We have hardwares, we have pharmaceuticals, we have electronic distributors, we have import and distribution businesses. Yeah, so those are some of the examples of the wholesale. So if you are in any of those businesses, this is the webinar for you. Basically, wholesalers are characterized by very high transaction volumes and a very significant VAT exposure. Also, there's a lot of inventory movement, and there's a very large supplier network, and there's a lot of cash flow pressure that is going after debtors and looking for money to pay suppliers. So basically, cash flow is most of the time under duress. So for the retail businesses, these are basically businesses that sell directly to the customers. So which are these businesses? These are supermarkets, these are shops and boutiques, your local pharmacy, your favorite electronic store, the online businesses that you see popping up in all of your adverts and TikToks and Instagram. We have restaurants and mini marts. So these are some examples of retail businesses, and they are usually characterized by a lot of cash transactions, which is an exposure. Also, they have got high VAT audits, exposure to VAT audits, basically suppliers and also ATMs compliance. Also, there's a lot of point of sale, the system that you're using and its integration to ATMs is also a characteristic of it. There's a lot of inventory risk. Basically, if you're not careful about your movement schedule of your goods or your purchases, it gives you an exposure. Also, there's a lot of, in the recent past, a lot of increased digital payment monitoring, such as your till numbers, your POCHI, and the other forms of digital payments that we are currently using. And finally, the informal sector. This is your local mama mboga. This is your favorite mtumba plug or your thrift store. We have got open air market traders, even the border operators, all the artisans, your mechanics, the kiosks, the online sellers, the side hustle that you currently have. They are basically informal, but yeah, they bring about revenue, a lot of it, which for a very long time it's not been tapped by KRA. So that is basically the focus, because the informal sector contributes very significantly to the GDP, but remains largely undertaxed. So KRA is coming all guns blazing to the informal sector. So the earlier you shape up, the less chances are that you're going to be in trouble with the taxman. So whichever way that you run your side hustle, your mtumba operation, if KRA decides to focus on you as much as there is low bank penetration, and most of the time you'll find that in this informal sector there's very minimal tax knowledge. And that is where we come in. That is why we brought about this webinar, to help you understand the kind of taxes that you are required to pay by law, so that you'll not be found in the dark by KRA. So what are these taxes? What are these taxes that affect these sectors? Number one, we have got income tax. Income tax, this is applicable to limited companies operating the wholesale and the retail trade. Also, besides that, we have those of us who use our personal PINs to run the businesses. That is whereby we have just a business name, and but the PIN belongs to us. Or you can go into a partnership with a friend or rather a business associate. You open up a partnership, and then you run the business. So in the cases whereby your business is a limited company, basically tax is charged on the benefits, on the profits, which are adjusted. If you run using your own personal PIN, the same case applies. However, the rates are different. For a resident company, the rate is 30%. For those of us using our personal PINs, all your income is combined, and it is put under the graduated scale, and then you pay the taxes. But important to note, taxes on businesses, the income tax is paid on the adjusted profits. Basically, how we arrive on the adjusted profit is whereby you take the gross income and then you less allowable expenses. In the recent past, the term allowable expenses has really shifted with the invention of e-TIMS. For your expense currently, especially for 2026, for your expense to be allowed, for your cost to be allowed, it has to be e-TIMS generated, unless it falls in the exempt category. Exempt, there are expenses that are exempt from provision of e-TIMS. And for 2025, a leeway has been given whereby, yes, you can claim the expenses that are not e-TIMS compliant, but you need to fill a form whereby you give the details, even the PIN of the supplier who supplied you with those services or those goods. And also you have to scan the same and upload in the KRA system. It's a very daunting task. I don't know how many of us have been able to actually file the income taxes, business incomes, their business returns. It is a very daunting task, and it's a very huge amount of work to those practitioners who are aiding people to file their returns. So basically, that will bring us to our webinar next week. There are some questions that you're supposed to ask your auditor. There are some questions that you're supposed to ask the person filing your returns, because at the end of the day, if it is not done properly, then you're going to suffer the consequences. Next week on Friday, we are going to have a webinar that will expound on the kind of questions that you're supposed to ask your auditor as they file their returns, so that you should be on the know to know what is being done in your returns, to avoid penalties and to avoid issues with KRA. Apart from income tax, we have turnover tax. Turnover tax is basically an alternative form of income tax. So this is what usually happens in turnover tax. It usually affects businesses that have a turnover between 1 million to 25 million, and it is charged 1.5 of the gross turnover, sorry, not 3%. It is charged 1.5% of the gross turnover on a monthly basis. So what usually happens is, at the end of the month, you aggregate the kind of income that you have, the sales that you have done. No expenses are allowed. For example, if your total sales in a month were 100,000, so you pay 1.5%. The advantage of turnover tax is it is final tax. You will not be required again to file business income at the end of the year. So it usually really avoids a lot of documentation, especially in this era of e-teams, especially where you cannot trace your, let's say you get your goods from Isili or Gikomba, whereby, of course, you cannot be given an e-teams receipt. It is usually a good alternative uh, for you to run your business. You just pay 1.5% of your gross sales in a monthly basis, and then you're done with the taxman. However, having turnover does not exempt you from having VAT, because the turnover, the range of turnover is TOT is between 1 million to 5 million. The threshold for VAT is 5 million. So when your business surpasses the 5 million mark, then you're supposed to register for VAT and start actually submitting your VAT returns, even if you are on turnover tax. I hope that is clear. So basically, what means if your business is between 5 million to 25 million and you have opted for turnover tax, because turnover tax is not compulsory, it is just an alternative way. So on a monthly basis, you're going to pay, number one, TOT, that is 1.5% of your gross turnover. And number two, you're going to pay VAT, that is 16% of the difference between your output and your input. There has been a lot of questions whereby you'll find people, KRA has flagged them for failure to register for VAT while they have passed the threshold. So most of them, they claim that they are already in TOT and so they're not required to do KRA, to do VAT, but that is not the case. Having TOT does not exempt you from actually registering for VAT and paying for it on a monthly basis. So basically what we have seen a lot of people do when they exceed the 5 million threshold, they opt out of TAT and they do both income tax and VAT. But if you're still willing, if you do not want a lot of issues with KRA at the end of the year, whereby they'll ask you for all the expenses which are written compliant, you can still opt to continue for TOT, but continue submitting your VAT returns. So basically what usually happens, the kind of challenges that usually really affect this kind of sectors is there's a lot of mixing between the personal and business cash. So there's a lot of gray area whereby KRA will ask you now, can you differentiate with proof that this is business cash, this is personal cash? So failure to do that, you'll find that it will give rise to a lot of additional assessments. Also, there's a lot of lack of records, because most majorly it is informal sector, and also there's a lot of under declaration of sales, in the sense that because there is lack of documentation, so there's a lot of under declaration of sales. A lot of people who we have dealt with, or rather have dealt with, is they ask you to file for them returns, and also, and already they have preempted the amount of taxes they want to pay. Anakuambia nifailie, lakini sitaki kulipa zaidi ya 2,000 kwa TOT ama 500. So basically, there's a lot of under declaration, and in case there's a review, when your records are reviewed, it might bring a lot of problems. So what KRA has done, where KRA has really turned its focus to these M-Pesa transactions. They'll ask for your M-Pesa statement. They'll ask for the statement of the till numbers. They look at your bank deposits. They also look at this kind of declarations your suppliers have made, the ones they sold to you. Also, they look at items, invoices, patterns, like how much the value of the sales that you have given on items versus what you are actually declaring. So there's usually a common risk as far as the the TOT is concerned. Then we have pay. Pay, this is usually, it mostly affects the wholesale and the retails where you have employed people. So you're supposed to pay on a monthly basis if you've got staff. What we have seen, especially for those of us who have got limited company, a business is running and they have got no pay obligation. And what you have to know is the directors are the first employees of the company. Why, whichever time you start your business, it's advisable to onboard for pay registration. And also the first people who are supposed to be there, these are the directors, especially those who are dealing directly in the business. So to avoid a lot of issues, to avoid a lot of carry issues, number one, ensure that all your directors are under the pay, and then you submit the same on a monthly basis, usually done on before the 9th of every month. And also, there's a lot of payroll understatements, because what usually happens is when KRA comes, they look at your payroll and how much you are declaring under your pay. So it is usually an area where KRA has found really bountiful harvests, because what usually happens is if the directors are not in the payroll, any money that goes out as a cash withdrawal and it's not properly explained, it's usually taxed at 30% under pay as you earn, the tax head. So let us be very careful about how we are handling the pay. It might look like not really a major issue, because most businesses, they really concentrate on the income tax and on the VAT, and they forget about pay. And the rate of pay is 30%. The rate of VAT is 16%. So the kind of effort that you're putting to ensure that you comply with VAT, please ensure that also you put the same effort for pay as you earn, because it may really eat up the profits of your business. So what surely KRA focuses on as far as this is concerned, they look at the kind of declarations under SHA and under NSSF and how much you're declaring under pay as you earn. They look at the bank salary analysis, especially for those people who they send a list to the bank so that the bank from the account pays the employees. So they look at that analysis versus what is in the pay returns. Sometimes they look at the staff lifestyle reviews, whereby, for example, there was a case whereby a director from under pay was being paid 30,000. But at the same time, the director lives in an apartment that pays a rent of 50,000 shillings. And at the same time, he drives Prado TX. So the question KRA was asking, with 30,000 shillings, with 30,000 salary, how are you even fueling? How are you even paying your rent? How are you eating? How are your children going to school? Very unrealistic. So in such a case, you'll find that KRA reviewed the pay returns upwards, and it cost a lot of penalties and fines and a lot of assessments. So to avoid that, ensure that you cover all this. And for further analysis, please ensure you always talk with your tax consultant as far as all these taxes are concerned. And then we have got VAT. We have said that it basically affects businesses that have got returns of between 5 million, above 5 million. So ensure that you register. If you're dealing with vertible products, ensure that you register for VAT. So businesses, when you have the VAT obligation, first of all, you must charge VAT on the supplies. Number two, you have to issue ITIMS invoices. Number three, you have to file your monthly returns. Number four, you have to maintain proper records. Also, ensure on a monthly basis you reconcile your sales and your purchases to enable you compare the data that you have with the data that is in the pre-populated returns from KRA. So basically what usually happens on the VAT, tulisema leo ni a teaching 101, ni they take all your sales, the output VAT, minus the input VAT, the amount of VAT that is charged on the sales, minus the amount of VAT that was charged while you're doing your purchases. Then the difference is what is usually the VAT that is payable. So they take the output, the sales VAT minus the purchases VAT, then the difference is what you pay. So some of the common issues that occurs under VAT is there's a lot of VAT disallowance. That is if you've got an invoice that is missing, if you've got a supply who is not active, if the invoice is not ITIMS generated, if there was an invalid PIN that was used, you cannot be able to claim that, and that will mean that you're going to pay a lot of taxes. Also, before the invention of ITIMS, there was a lot of sales suppression, whereby people will just balance. They look at their purchases, and then they decide which amount of tax they want to pay, and then now they declare their sales. So there's a lot of suppression, which is on its deathbed, and we'll see why. Also, for those dealing with the exporters and the zero-rated suppliers, there are some issues of the delays in the refunds from VAT. Also, there are some businesses where they do not account properly for promotions and discounts. If you're not careful, you'll end up paying VAT on items that you had discounted and also on promotions. So please make sure that there is proper treatment of these discounts and promotions. So I'll tell you this: if your invoices are rejected, input VAT will be disallowed. If your input VAT is disallowed, then it means the brother corporation tax increases. Let's say, for example, you have purchased goods worth 5.8 million on a particular month, but they were not compliant. So if the 5.8 has been disallowed, it means for every sale of 5 million, you're going to pay 16% on it without input, and you're going to pay 30% of it without purchases. So from the 5 million, you're going to pay a total tax of 46%. So please, to avoid all this, ensure that you have compliant VAT. And we in our subsequent, rather in our previous webinars, we have really talked about ITIMS and ITIMS compliance and how you can do your verification. So if you're not careful, then you're going to pay a lot of taxes. And if they're not compliant, then that VAT input will disappear very fast than to run your favorite joint on a Friday evening. So let's be very careful. Another tax, we have talked about income tax, we have talked about TOT, we have talked about pay, we have talked about VAT. Next, we have withholding tax, another tax that affects this sector. So withholding tax, this is basically tax on professional services, consultancy, advertising, commissions. And some of us will find that we have been appointed as rent withholding agents. So you have to be very careful about withholding the same. So as far as professional consultancy and advertising and commissions are concerned, any amount on a monthly basis that exceeds 24,000, if it falls on any of those categories that I've mentioned, you're supposed to withhold 5% and remit it to the taxman. Basically, what you're supposed to do is if you're to pay someone 100,000 on a particular month, you're supposed to pay them 95,000, and then you submit 5,000 to KRA. That is very important because under reviews, they will look at all expenses that you have claimed, be it professional services, be it consultancy, be it advertising, be it commission. And then they'll tell you that you're supposed to withhold 5%. So, but in 2025, Finance Act, it came with a saving grace. Initially, you're supposed to pay that 5% that you're supposed to withhold. Currently, you'll only be required to pay 10% of the 5% that you're supposed to withhold. You're just going to pay a penalty of 10% of the amount that you're supposed to withhold. But if you're doing it for a lot of years, you'll see that, okay, you can say that if 5% of 100,000 is 5,000, then the 10% for that is 500 shillings. It might not look like a lot of money, but imagine doing this for a couple of years, and you never know about the future of these changes. So it is something that you're supposed to do. It is something that you are required by law to do. If you've been appointed withholding tax for rent, you're supposed to withhold 7.5% on a monthly basis and remit the same to KRA. But this only happens when you have been appointed. But all the rest, they're implied, provided you run a business. You are automatically a withholding agent. So let us be very careful on that. So after we have covered the taxes, after we have looked at all the taxes, we have looked at income tax, we have looked at TOT, we have looked at pay as you earn, we have looked at withholding taxes, we have looked at VAT. I'd like us to look at ETIMS and digital compliance, because basically how things are moving, we are gradually moving from, we are actually moving from self-assessment to automated audits as far as KRA returns are concerned. Because for those of us who are even filing for 2025, already are given a pre-populated sheets whereby they have already determined the kind of sales that you had and the kind of purchases that you had and the expenses. And there's a kind of a pre-populated tax that you're supposed to pay. So for you to survive this, for your business to survive this, then you cannot ignore ETIMS. So basically, KRA introduced ETIMS to reduce fraud. There's a lot of fraud of claiming invoices that were not there. Also, it came about to improve VAT compliance and track real-time transactions, because they are automatically updated into the KRA servers after transactions. So this is why the ETIMS is a game changer. Previously, businesses could issue manual invoices. If you have got, let's say, QuickBooks, you just issue an invoice from QuickBooks or handwritten invoices. So basically, this meant that there was a lot of fake invoicing, which was very common. And so, and also to suppress your sales was a little bit easier. But now the transactions are very traceable. The system automatically matches what you say that you bought and what your supplier say that he sold. If it does not match, then it is automatically disallowed. So we have to be really careful. But some of the challenges that affects especially retailers and the informal sector are that there's a lot of system integration cost. That is integrating your POS and your ATMs. It is imekuwa like a very daunting task, sorry, and it's not been easy. So it's been a lot of push and shove. So there's been increased integration costs. Also, there's a lot of internet dependence. So you'll find that there are some businesses that are located in areas where there is no internet. So actually transmitting the same to KRA inakuwa ngumu kidogo, and it's been really one of the major challenges. Also, there's a lot of staff training gaps. I'll give you an example. There's a client of mine. One of the staff, he was giving out a receipt of sales of 50,000. So instead of 50,000, the staff added a zero. Ikakuja 500,000. So for some reason, because the guy is not, he's actually in retail, not a lot of transactions. So while it was by some saving grace on the last day of the month, I logged into his career, and then I saw that there have been a lot of sales. Only to ask him, and while I reviewed his ATMs, we found that there is such errors, like 3 of them. So basically that was 1.5 million. And for some reason, that was the day that the ATM system was very low. We had to try until around 10 in the night. That is when it accepted. Because if it would have jumped to the following month, then the person would have been forced to pay these taxes. Even if they provided a credit note for the same sales, it will only have been carried forward. But for the 1.5, would have had to pay the VAT that was related to this. So there's a lot of gaps in the training of staff. The same challenges affects the informal sector. And one of the most important emerging trends is KRA has increasingly pushed for wider ATMs adoption, even among smaller businesses and non-VAT registered traders. This has also included reverse invoicing to the people that you're selling your goods to, whereby they can ask for your PIN. And if you do not know how to produce an ATM's receipt, they can do it from their end, and you'll only acknowledge the same. So there has been a lot of pushing by KRA to widen the ATM's adoption. Basically, by forcing the people that you sell your goods to have ATM's invoices, you'll also be forced to produce ATM's invoices. That is basically making it a requirement for all the businesses. So the faster we adapt, the faster we know how to work around it, the better it will be for our businesses. I really hope that we are together. I really do. And I hope your questions are being answered. I hope your questions are being answered. If I would look at a few of these questions, Liz, there's someone who asking, when I'm filing for VAT, am I supposed to claim for zero and exempt? If you're dealing with the same, if you're dealing with zero rated or exempt, then yes, you can do that. And also you're supposed to declare the same. If you're dealing with exempt goods, if you are selling, let's say, especially foodstuffs and cereals, and you have got VAT obligation, yeah, you're supposed to declare the same income in your VAT returns, even as far as both the sales and the purchases are concerned. I really can see that your questions are being looked at. Probably I'll look at another question because we have a lot to. I wanted us to cover really a lot of things as far as it is more of a crash course. But I can see that most of your questions have been answered. Please keep the questions coming. Please keep the questions coming. So someone is asking, you had said that directors are among the first employees in a business. Since the business runs at a loss during the first years, and in fact, some directors pay for expenses from their pockets, what should the directors do? He cannot even afford to pay for his salary. How will he put himself as an employee? So my question is, where are you getting the money? Where are you getting the money to pay for the expenses? Because if you've got a separate, let's say you're in employment and you're in business, then yeah, that's acceptable. But imagine this: you have got no other business. You have not included yourself in the. There are no profits that you are getting. You're not paying yourself, but you are actually investing into the business more. The question is, where are you getting the money to invest on that into that business? If you can be able to show, and your returns as a director can able to show that I have this separate income, so I do some injection into the business because it's in its startup period, then that will be accepted. But if you cannot explain that, because carry most of the time they do not really object on any reason that you give them. But the question is, can you demonstrate it? If they look at your personal returns, is it enough to finance the business? Unless you're a miracle worker, then KRA will accept your explanation if your explanation makes sense and there's actually proof of that. So yeah, let's keep the questions coming. Let's keep the questions coming. I think my co-host will continue answering your questions as we look at the impact of the finance bill. Yeah, as we look at the impact of finance bill, and then I'll come back to your questions because I know they are more than able and willing to do that. So please, my co-host, continue answering those questions. So I'd like us to look at the impact of the finance bill 2026, how it is how it is really affecting these sectors, and how these changes affect wholesalers, retailers, SMEs. So basically what happens, as per the Finance Bill 2026, there's been a very clear signal on the policy direction by the government towards, number one, increased digital tax enforcement. Number two, expansion of the tax base. Number three, enhanced electronic compliance, that is ETIMS. Number four, greater use of data analytics, rather data analysis. Also, there's a lot of policy that is geared towards reducing tax leakages and increased taxation of consumers, consumption, and imports. So I'd like us to look at the ways on which the finance bill affects the sector that we are talking about. So as far as VAT and retail pricing are concerned, there has been an expansion of the exemptions. Number one, the people who have been majorly been affected initially, the people who are dealing with scrap metals. Because majorly what happens to scrap metals is you cannot find, it is very hard to find people who will supply to you the scrap metals with items invoices. Because most of these businesses, what they do, wao hutumia hata machokora, wanaenda wanasanya machuma penye wako, ama wakipata sufuria yako inapika hapo nje, wanapita nayo, wanaigonga-gonga, wanapelekeana huko. So basically there's been no input VAT as far as scrap metals are concerned. So in the proposed bill, VAT on scrap metals wants to be abolished, or rather wants to be scrapped out. We have got the inputs for animal feeds, the raw material for pharmaceuticals, electric buses. Also, one outstanding thing that is usually kind of affects what we're talking about is mitumba clothing. So basically what the bill says is after importation, because during importation there has to be import duty, there has to be VAT. When all those taxes have been paid, once imeingia into the country, those sellers in Gikomba, those sellers in whichever place they're selling in mitumba, they're going to be exempted from VAT. Basically, that means they'll only pay income tax. And also, as far as income tax is concerned, what the government was actually trying to drive at is during importation. For example, if the importer has imported mitumba worth 1 million shillings, what KRA was saying is they will presume that the profit is 5%. So 5% of 1 million will be 50,000. So from the 50,000, then the person will be charged a tax of 30%. That means they're going to pay 15,000. So paying 15,000 from an import of 1 million, in all honesty, it would have made more sense. Allow me to be kind of a devil's advocate, because there'll be no additional documentation required. There'll be no additional items expenses required. You're just going to pay actually 30% of 5%. And that is 15,000 from 1 million. And then you are done with the tax man. But we have seen that that suggestion has been dropped. Hopefully, they're not going to drop the exemption from VAT for mitumba dealers other than importers. We really hope so, because it's going to really affect our it's really going to affect the cost of some of us who really thrive on mitumbas. So as also the wholesalers, they are affected the same as those people who dealing with retails. If any of our wholesalers, they are under these categories as far as VAT is concerned, then they are going to benefit from the current finance bill. So it is a win-win, or rather a win-lose situation. We are not saying that items in the finance bill are favorable, also we like to look at it from both sides, both the positive and the negative. Also, there is a suggestion about withholding taxes on scrap metals. The scrap dealers are going to be withheld 1.5% when they're actually selling it to the people who smelten, or rather, when scrap metal dealers are selling, they're going to be withheld 5%. This is to ensure that they declare all the taxes. Apart from that, we have got the one which I've talked about, but it's been dropped, so it is no longer there, about the mitumba importers, the 5% of the 30% of 5%. That is also one of the items that is being affected. So the Gikomba traders, the mitumba wholesalers, the informal retailers, they're all going to benefit from these exemptions. And a little bit later, we look at how negatively it's going to affect them, and I'll tell you how. So basically, the impact of this, the prices will be a little bit competitive because there are less taxes. Also, there will be an increased consumer demand because the items are more affordable. I think this is one of the ways that the government would want to try to encourage mitumba traders, because it is like the government has realized that second-hand clothes are part of the national uniform, so it cannot be ignored. So basically, they have decided to, okay, now if this is the case, then let's make it more affordable. Also, we have solar accessories, electronic resale, motorcycle trade. Basically, these are some of the benefits that are there in the finance bill. Apart from the benefits, let's look at the not so admirable side of the finance bill. So what basically happens is the bill strengthens KRA electronic tax enforcement powers. What used to happen is, if you're found selling items without a valid DTIMS receipt, initially, you have to pay. If you're a corporate, you'll pay 100,000, or if you are an individual, you pay 10,000 shillings. So the bill introduces severe penalties. If you do not issue electronic DTIMS invoices, if you do not submit your returns, some of us, we registered for VAT, we registered for our PINs, but we have never filed returns. If we do not pay the taxes electronically, initially it was just issuing of valid invoices, but returns and taxes have been included. And the penalty, currently, as far as the bill is concerned, you're going to pay 2 times the tax due. You're going to pay 100,000, or for individuals 10,000, whichever is higher. So if you're supposed to pay tax of 100,000, so 2 times is 200,000. So you're not going to be penalized 100. You're going to be penalized 200,000. If you're a corporate still and you are to pay a tax of 10,000, so double of that is 20,000. You're not going to pay 20,000. You're going to pay 100,000. So these are some of the severe penalties. These are some of the penalties that they really do not. They are giving the taxman a lot of powers, and the penalties for non-compliance have become a little bit severe. So we really hope that these are some of the items that are going to be removed. There's also been suggestions for changing Section 42 of the VAT Act. Section 42 basically says that a registered VAT supplier is supposed to give a VAT compliant invoice. Basically, what the current bill is saying, the current bill wants to delete the word VAT registered and inputs the word person. I want you to help me think around it. Initially, it used to say that a VAT registered person should give a VAT compliant invoice. Right now, is a person is supposed to give a VAT compliant invoice. What are really the implications of that? Because let us give it in another context. If I say doctors are supposed to prescribe drugs, right? And then I come later and then I say, instead of doctors, let me say person. Person is supposed to administer drugs. What is the implication of my changes? Does that mean that the initial proposal of even the small businesses paying VAT is coming to birth? Please let us engage in the chat box and tell me what you think. Because the word VAT registered person is being replaced by the word just person. So any person doing business is supposed to give a VAT compliant invoice. Let us engage and tell me what you think. It might be that we are coming towards the end of the threshold of 5 million, because if any person doing business is supposed to give a VAT compliant invoice, if you're dealing with whatever product, basically you can't give a VAT compliant invoice without paying for the VAT itself. So I think these are some of the issues that KRA should come out and really clarify upon before. Hopefully, it's not going to go through, because it's going to really affect small businesses. So the impact on wholesalers' business. We have currently wholesalers must now fully integrate to items, ensure that there is invoice accuracy. Also, we have whether you like it or not, you have to digitalize your stock movement systems, because one of the items that KRA uses to know if there's been an understatement of sales is to look at the stock movement schedules. You said at the beginning of the year you bought 1,000 bags of cement. You had 100 bags of cement. During the year, you bought 1,000 bags of cement. At the end of the year, you have 50 bags of cement. So basically, from that means you sold 50 bags of cement. But in your returns, you say that you only sold 700 bags of cement. From the simple maths, means that you have underdeclared your sales. Those are some of the ways that KRA is coming up to recalculate the undeclared sales. So returns are no longer just numbers, but they have to be supported. So failure to do this, failure to integrate your items, failure to ensure there is invoice accuracy. Failure to digitalize your movement of stock or automate your reconciliation, you'll have a lot of VAT disallowances. You'll have a lot of penalties. You'll have a lot of assessments. And there will be a lot of system-based audits, especially in this era of e-teams. So be it in the wholesale business, be it in the retail businesses, be it in the informal sector, ensure that you comply. We are coming into an era whereby you will no longer hide behind the informal sector. KRA is there's actually a lot of visibility and automation of systems to ensure that the tax base has been expanded. So the earlier you onboard, the earlier you are going to save your business. Because remember this, KRA has the ability to audit your business 5 years. So it might not be this year. Let's assume in 2028, they tell you now bring your books for the past 5 years. That goes back to 2023. How safe are you? How safe is your business? And they will not really want to know if you kept your books or not. So the earlier you conform, the earlier you jump into the bandwagon of compliance, the better it will be for your business. So KRA will increasingly compare your point of sales with your items invoices. They will watakwambia utoe POS report, and then they compare what you have in the system. If there is any variance, then you have a compliance issue. They will look at your bank deposits. How well can you explain the money coming into your bank account? If not, all of them are considered as sales. They are increasingly following up on M-Pesa transactions. One of the requirements that they will ask you for when they're doing a review is the director's M-Pesa statements. So how well can you explain M-Pesa statements? How well can you explain your M-Pesa money coming into your M-Pesa account? Let's talk about the informal sector. The informal sectors have become one of the biggest targets. So if your business is operating through WhatsApp, you're becoming visible. But remember this, you're not becoming visible only to you. You're becoming visible even to KRA. We have TikTok, we have Facebook, we have Instagram. Most, if not all businesses, ukienda hapo inakwambia ulipe na pochi, inakwambia ulipe na till number, inakwambia ulipe na pay bill. So whether you like it or not, because what usually happens, the KRA usually sends their people to go around businesses. Watakuja wapige picha ya biashara yako, the till number, ndio akikwambia kuandikia barua kuambia ulete till, already mpaka wanajua till number yenyewe, always leta a till number that is not there. So currently they're doing a lot of research from their side. Some of us, even in our online businesses, to make your payments through this pochi ama through this pay bill ama through this till, already set to only your customers. Even KRA can see that now. So by the time they ask you to come in, they have actually a lot of data. That is why in most of the webinars that we've had, Dr. Regina has really reiterated on the fact that when you receive that first letter from KRA, number one, do not go alone. Number two, ensure that you've consulted your tax expert, because going there blindly, you're going to cause more harm than good. So, especially for those of us in the informal sector, KRA is coming for us. KRA is increasingly becoming conversant with how we are doing our businesses. Even some of them, they are some of your customers. So they actually know the cost of goods and how they paid for it. Because this is what happens. Previously, small businesses were largely very invisible. Ungekaa for like 10 years, nobody even knows that you're doing a business. But currently, digital footprints, they are creating audit trails very automatically. You cannot run your business currently without advertising, including the prices, including the mode of payment. Some of even the KRA officers will pose as your clients, and you'll even sell to them. So we cannot really say that we are in hiding unless you are nowhere digitally. So whether we like it or not, KRA is actually gathering a lot of information and moving closer to us. So the earlier you start complying, the earlier you know how to keep your books, the earlier you know how to do proper documentation, the better it will be for your business. Another part is we have the pre-populated returns. So the commissioner now can generate pre-populated tax returns using available taxpayer data. As for those of us who are filing, especially for VAT for the last 2 years, for income tax, especially for 2025, moving forward, as I said, we are gradually moving from self-assessment to system automated assessment. So the earlier we ship up, the better it will be for our businesses. The earlier we'll be able to salvage our businesses from excessive tax liabilities. So why is this important? KRA will increasingly rely on eTIM's data. It will increasingly rely on the bank information, the withholding tax records. Most of us tunafanya biashara, and then the other person anasema nipatie pin yako withhold 5%, and then unaona 5% sio pesa mingi. You think that you're done with the tax man. Basically inamaanisha at the end of the year, kama ulikata 5,000 na ulifanya kazi 100,000, you have to declare the 95,000 that you did not declare, rather the full amount of 100,000, and then upunguze chenye already wamekukata, and you pay the balance. So basically, if you've been withheld in a trail, there's a lot of M-Pesa data and KRA can access. Hopefully, the data protection clause is going to still remain, because currently KRA is seeking for access to data and also agency notices that will affect even M-Pesa, whereby they can give agency notices to all your financial channels. So imagine this, KRA you have a liability with KRA and then wanafunga hadi M-Pesa. So umeamka asubuhi unaenda kazi, umepanda matatu wenyewe, unajua kuna pesa kwa M-Pesa. Only unajaribu kulipa, then nakwambia kupanda agency notice. Sijui kama makanga atakubali, but I think these are some of the clauses that are far-reaching and they're not supposed to see the light of day. Also, there's a lot of import records. Currently, KRA is integrating import data with your VAT records, with your VAT auto-populated. So chances of under-declaration are really low. Also, there's a lot of supplier declaration, whereby the supplier is supposed to give all the data. So basically, hiding is becoming really difficult. So these taxes have got a lot of impacts on businesses. It will only, the businesses that are going to survive are the businesses who are going to put their affairs in order well in advance. So failure to do that, we as business owners are going to have a lot of issues. It's going to impact our businesses because what basically the government does, it will give you two favorable clauses. Let's say umepatia exemption or reduction of taxes kidogo tu, but itaweka 9 clauses that actually favor them and increase taxes. Some of us will amplify the not so important issues and actually leave the very important issues that will actually affect our businesses, and then tunapata zimepita zinakuwa Finance Act. So I think it is high time, even as business owners and as taxpayers at large, we become involved in the public participation, and also we scrutinize these finance bills and actually remove those clauses that will really adversely affect us. Also, we have got tax avoidance schemes as far as Section 18A of the TP is concerned. So basically what this means is if the commissioner feels like you have been involved in a tax avoidance scheme, then it is paramount to fraud. They can go back even beyond the five-year mark. So basically what this bill is doing, it's giving more power to the commissioner as far as implementation and review of returns are concerned. So I think it's high time as even business owners, even as consultants, to actually have a deeper look of the items that are in the finance bill. Wachana na the hearsay, most of it in the radio stations and the propaganda in the social media. Because even the government itself pays its own bloggers to amplify the good side. The best thing to do is actually read the bill for yourself and know what is actually in the bill for you to make a comment on the same. So basically, another power that the commissioner is being paid is he's going to issue assessment based on audit findings, supplier data, stock inspections, data management systems, item submissions. The commissioner is being given a lot of powers to make VAT assessments. This is as far as the new Section 29A is concerned. Basically, it is adding more powers to the commissioner. And that will adversely affect all the wholesalers, retailers, and those of us in the informal sector. I think the downside supersedes the good side of this bill. And especially for those of us in the informal sector, most of the years we have been seeing KRA impose some of the taxes, and then provided it did not affect us directly, we let them go through with it. But this time round, ni kumoto. This time round, we have to really scrutinize this bill and ensure that the taxes that are being implemented, the powers that are being given to the commissioner are actually manageable. Because one of the ways the KRA is going to give, rather the government is going to bring back the tax amnesty for taxes that were due before 31st of December 2025. Ideally, the proposal says that it's going to run until December. So for any taxes that are before 31st December 2025, if you paid the principal, the penalties and the interest are going to be waived. So it is one of the items that are favorable. I don't know if it is meant to funga macho, but it is one of the advantages apart from the exemptions that is trying to bring about businesses. Now, the thing is, there's some import changes. Most of us tunaenda Uganda na Tanzania, either kununua, let's say, furniture, glass products, printing materials, plastics, labels, packaging material. So this bill removes the exemptions. So basically inamaanisha if you're doing this, if you're taking your materials from either of the East African communities, then you start paying import duty on the same. So hii ni watu ukimbia Kampala kuchukua packaging materials ama printing materials ama glass products, plastics, labels, unakimbia Tanzania. I don't know the adverse effect it will have with the East African community. I don't know if there'll be now, because if we put import duty on that, then basically hata TZ wataanza kuweka zao, because currently it's a free market. But so if we start, then basically namaanisha even the other countries are moving your products to Uganda or Tanzania, exporting it to them, pia watasema now because we are doing this to us, wacha sasa si tutoe hizo exemptions. And it's not, anyway, we'll wait and see. But these are some of the sectors that are going to be affected with the removal of the exemptions. Also, what is going to happen is KRA is shifting towards real-time tax administration. So the overall message for the finance bill is the bill is confirming Kenya's transition towards real-time tax administration, like hapo. Ukiuza item yako inaonesha KRA, ukinunua inaonesha KRA. Electronic compliance, at the end of the year, these were your sales, these were your purchases. This is the tax that you're supposed to pay. Automated audits, sio lazima inafika mahali, sio lazima KRA hata wakuje kwa nini yako. It becomes totally automatic with the data that they are accessing. So for those businesses that are heavily reliant on cash, for the retail chains, for those of us in the informal sector, for those of us in the electronics who are dealing with electronics and mitumba, online sellers, are those of us when you're dealing with fast-moving commodity consumer goods, chakula na anything that is usually very fast-moving. KRA is putting a lot of exposure because the systems are being automated. So what are some of the recommendations that we would give? So number one, please automate your inventory system, your sales and your purchases. Ipi itakusaidia kama biashara, because unajua biashara usipochunga utapata wewe unafanya tu biashara, unanunua stock lakini kila time uko na shortage, hujui penye inapotelea. So please automate your inventory systems. It is high time for businesses to consider compliance not as a cost, but as an investment, because it basically will determine the kind of profits you're going to make. If you continue looking for someone cheaper to do your books, if you continue looking for a cheaper system to do your stocks, then the cost of compliance, the cost of the liabilities that you're going to get will be far much reaching than the amount of money that you would have saved. So also integrate your items fully. Integrate it with your POS. Because basically what the KRA will do ni watakuja then watasema wanataka kufanya system audit. Once wamesema wanafanya system audit, there's nothing that you can prevent them from. Watafanya system audit wa mine data yote from your system, wa compare na items. Hapo watajua all your stocks, all your purchases, all your movement. And they're going to recompute your taxes. Apart from under declaration of sales, they're going to recompute your sales as per, also according to your stock movement, the schedule of your stock movement. Apart from that, ensure please you reconcile the supplier transactions on a monthly basis. That is also ensure you reconcile between the things that you have bought with the things that you have claimed. If there is any supplier whose transaction is not appearing in your monthly VAT returns, talk to them either to ensure that their systems are uploaded, ama wakutengeneze credit note na wakupatie invoice that is compliant. Also conduct health checks. It is one of the services that we provide, whereby we look at the general well-being of your business and also how prepared your business is in the event that there is a review. And also we will recommend on the steps that you're going to take to avoid issues with KRA, to avoid to reduce the liability that you're currently exposed to. If there are taxes that you're supposed to pay, we'll tell you pay that taxes. If there are adjustments that you're supposed to make, we'll tell you to make those adjustments. So ensure that you do health checks to your businesses and just strengthen your controls. Also, one of the things that you're supposed to do is reconcile your bank deposits. Ensure that you can explain all your bank deposits. Because failure to do that, as we said, KRA will assume bank deposits zote ni sales. And in one of the case studies that you're going to look at, it was an exact demonstration of that. Also, let us try and gradually formalize our businesses, hata kama tuko kwa informal sector. Because whether we like it or not, KRA is going to watatufikia. So the earlier we start preparing ourselves for the eventuality, the better. And please let us ensure that we keep proper books of records. So what are some of these audit triggers? Number one, if there is a mismatch between your sales and your bank deposits. If you cannot explain the kind of deposits zinaingia kwa account yako, then basically that will be assumed as sale. Number two, excessive inputs, VAT. Kila siku una claim refund. Ama siku unalipa VAT unalipa 2,000, 3,000, then unarudi kwa refund. That is a trigger because KRA will wonder, number one, where are you getting the money to do your purchases na hauna profits? Number two, kwani kazi yako ni kununua tu stock, hauzi? Also, low profit margins. Imagine a person having a revenue of, let's say, 200 million, and then anasema alipata profit ya 1 million consistently. Come on. how realistic is that? We are not saying that businesses cannot make losses, but you cannot continually make losses. You cannot continually not make profits and still run the business. 10 years later, why don't I make losses? When are you a charity case? Okay, I'm just saying what Kerry will say. So that is an audit trigger. Also, we have related parties whereby you deal with you claim purchases from related parties or expenses from related parties. Basically, Kerry will come for you and tell you to please explain. Also, if you come up on stock variances, that is a major audit trigger. And basically, what is currently happening here is, I don't know if some of you saw the other day, the commissioner told us that KRA is coming for your TIN numbers and your pay bills and your mobile money inflows. So this is especially targeted for informal traders. So that is also will be a major audit trigger. And if you are not filing your returns, ama kila mwaka una file ni returns, lakini pale kwa Instagram inaonyesha ulienda diani. Yeah, KRA will ask you, please show us the God that you're serving. So because it does not make sense. And also, yeah, we have talked about related party transactions. If a lot of expenses are coming from your sister companies, there are a lot of if it is a family-owned suppliers, hapo ndo unanunua vitu, kama ni expenses, you are claiming them from a director's, let's say, business, then of course it will bring a lot of scrutiny, both to your expenses and also to your purchases. And this is one of lastly, we have got lifestyle audits, especially for those of us in the informal sector, for those of us who are doing online businesses, for those of us who have businesses in TikTok. So imagine this, in your TikTok page, unauza items, ndio? Unaonyesha kila siku na advertise items, unauza. Kidogo kidogo, unaanza kupiga picha umeenda diani. Then you're a small girl with a big goat. I do not refute that is possible. But sasa hebu tuambie mbona unafile returns. Hebu tuambie mbona unasema mwezi mzima uliuza sales zilikuwa tu 30,000 peke yake. Kidogo kidogo umenunua gari, unapiga picha umeenda Mombasa umenunua gari yako mpya. Ama kidogo kidogo unaonesha umejenga, unafungua nyumba yako. But the question is the same reflecting in your returns? I do not have any issue with people posting their pictures. I do not have people because yeah, true, I believe in God, and God is a God of miracles and expansions. But at the same time, he's still the same guy who say that we give Caesar belongs to Caesar. So if he has expanded you, then even your returns ought to have expanded. I have not been paid by KRA. I have no affiliation whatsoever with KRA. I am just trying to help you think how KRA will think. So we have got large bank movements. Banks have got an obligation to flag big, large bank transfers. So if you've been flagged, KRA, of course, will come and ask for their dues. So yeah, it is a requirement by banks to do that. Lastly, I'd like us to look at tax planning strategies. Tax planning strategies. What are these things that you can do? Number one, please, I know we have talked about it over and over again. I know we have talked about it time and time again, but we will not get tired of talking about it. We are not going to stop talking about it because the success of a business rises and falls as far as its record keeping is concerned. Because good documentation is the strongest defense during an audit, not vibes and inshallah. Number two, separate your business and personal accounts. This is one of the biggest mistakes for SMEs. The same bank account ndio unaweka pesa yako ya chama, unaweka mchango ya sijui harusi ya nani, unaweka bili ya hospitali huko, wewe ndio treasurer unaitupa huko yote, unaweka biashara yako huko, unachanganya kila kitu. KRA watakuja wakuulize hii pesa mingi ni kama ni tajiri sana. By the time una explain na bila documentation, this basically will be a case of a good deed going punished. So please, by all means, separate your business and personal accounts. Personal libaki personal, biashara ibaki biashara. Because hata ukisema unatoza biashara unaweka personal ndio KRA sione. Of course, narration ya bank statement itakuwa hapo. Itasema ilienda wapi? Itasema ilienda wapi? And that will be the beginning of the end. So let us ensure that we separate them kabisa. Also, do your due diligence as far as suppliers are concerned. Number one, angalia tumia pin check, angalia pin status, angalia VAT status, angalia items compliance. Ukipatiwa receipt, kuna code huwa inakuwa hapo chini, scan it to look at the authenticity of your returns. Ensure that you find your returns. I don't have anything against these people in the cyber filing returns, but at least ensure anafanya the right thing. We had a case whereby there's a person who was biashara yake ilikuwa ina rake over 50 million in revenue, lakini huko walimfilia ni returns. So please, filing compliance, and if you want to have more insights on how filing is done and the kinds of questions that you're supposed to ask your person, please join us next week so that we can answer for you those questions. Because this is what happens. Unverified suppliers will lead to VAT disallowance, will lead to expense disallowance. Pia KRA atakwambia wewe sasa wewe you are a party to fraud. There will be a lot of allegations that you cannot fight. So ensure that you verify your suppliers and then also do health checks. Achana ngoja mwisho wa mwaka. Periodically after a quarter, after every quarter, ensure that you do your reconciliation. You do your ensure that there is compliance with the payroll. Ensure that the person doing your health checks anakwambia the kind of exposure that you're doing. Ensure that there is items integration with your POS and also the stock movements. There is reconciliation for that. Please do tax health checks for your systems, for your businesses. Because the question is, kama unasikia ni kama kitu inakuuma inapotea, inakuuma inapotea. Sasa wewe badala ya kuenda uangaliwe, we kazi ni kukunywa maji inapotea. By the time unaenda hospitali unapata wanakwambia uko na tumor ime overgrow, ni karibu na kuwa mwenda zake. All this would have been avoided if you have done health checks when there was those signs. So the same applies to taxes and businesses. Please please do tax health checks for your businesses. Also ensure that you do your stock management systems, because basically they will reduce theft in your biashara. Also, it will reduce the variances zenye ziko hapo. Also, there will be a little bit of manageable audit exposure. Hata kama ziko, you will know their existence and you know how to manage them. Because automation will, when you automate your systems, either kama unatumia ERP ama POS, whichever system, it will actually improve your accuracy and also improve your level of compliance because there's be a lot of integration. So, and also one other thing, early tax dispute management. If KRA raises an assessment, if KRA reaches out, number one, respond early. Kuna wale wenye wakipata barua ya KRA wanaidelete from their mail na wanasahau hiyo story. Kuna wale wenye KRA ikiwapigia simu, they actually block that number. Please, never ignore communication from the taxman. Respond very early. And if it's responding, do not respond as a business person. Look for a tax expert to help you reason out and respond. Always maintain professionalism. I have had instances whereby KRA wakipigia mtu simu hata mtu anawatusi anaombea venye wao wakora. Maintain professionalism. Because at the end of the day, KRA is protected by the law. And also prepare with the help of your consultant, prepare your reconciliation, and also try or observe the timelines. Because late responses increase penalties and enforcements. Also, you should do your cash flow tax planning. You should forecast your VAT liabilities, how much you're going to pay at the end of the month. Currently, it is very real time, whereby hata katikati ya mwezi unaweza download the pre-populated, uangalie sales ni ngapi mwezi, purchases ni ngapi. So kukienda hivi at the end of the month, nitalipa VAT ya pesa ngapi, and you start preparing in advance. You can even do an advance payment on the same if you see that the obligation will be high. Kuna installment taxes on corporates. You're supposed to pay installment taxes 4 times in a year, which will help you reduce the kind of taxes that you're paying at the end of the year. So these are kind of the things that you're supposed to plan. Because if you do not plan, then utapata you're paying a lot of liabilities at the same time, which will really affect your cash flow as a business. For an informal sector, open a business bank account. Wacha kutumia hiyo yenye unaweka kila kitu. Then use basic accounting tools. At the end of the day, at the end of this session, we'll give you one of the best tools to use as far as your record keeping is concerned. Also maintain your sales record. And then I hope you have understood about TOT obligation. I hope I was not talking to myself. And then gradually adopt e-teams, because currently hadi unaweza tumia USSD code kama una internet kutoa e-teams invoice. I'll say this. Wenye masikio, I hope wamesikia. Those of us with ears, I hope they have heard. Because maybe KRA will not give you a breakdown of how such kind of webinars do, because we are talking from the perspective of no. We are talking about issues where we have seen affect people that are dealing with KRA. We come with a mindset of the thinking of KRA and how they do the evaluations and how they do the assessments. So it is very important for us to continue engaging in such kind of webinars. We as RWK, we on a monthly basis without fail, we give 3 webinars, the first 3 Fridays of every month. We give webinars on how, and we enlighten people on how the taxes are affecting people. We enlighten people on tax laws and tax trends. We enlighten people on taxation of different sectors of the economy. Last week, we had a very impactful webinar on the finance bill and the budget. This week, we have handled people in the informal sector, in the wholesale and the retail. And I'd like to encourage you to continue engaging with us. And I think at the end of the my co-host will put up the contact if you want to contact us in case of anything. It is really important. I like to look at maybe one or two questions before I look at the case study and before we almost come into a conclusion. But I see most of the questions have been answered. So the question is, what do you do in a scenario where the employer does not remit the statutory deductions but have deducted the same on the employee's monthly pay? So what you do, you go with your P9 form to KRA, because at the end of the day, we will deduct. Ukipelekea KRA your P9 form to show the kind of taxes that were deducted, they are going to do a reconciliation and they are going to put pressure on your employer to remit the same. And also in your side, if there are any obligations that had arisen from such reconciliation, is going to be removed from your system. Let me look at another question. Let me look at another question. Maureen is saying they're being attacked. Basically, this is a classic case of the forest voting for an axe because the handle is made from wood, only for the axe to come and be used to cut them down. So it's not a matter of being attacked. The government will always try to push. So the question is, how much are you willing to push back and say that, no, we are not going to do this? There's a person who is asking, what happens if you earn and you're being taxed in another country, and you get your salary deposited in a bank, in a Kenyan bank? So this basically will really depend if there is a DTA with the country that is deducting you. Because what happens in most cases, of course, you have to declare the same income in Kenya. But now it happens. Now there are two ways in which it usually goes. Number one, depending on the DTA, the kind of taxes that you have paid in the other country, if the tax rate is higher than what you would have paid in Kenya, then you're not going to be taxed again. If the taxes are less, then you're going to pay the difference. Alternatively, if there is no DTA agreement, the taxes that you paid in another country are usually expensed. That is, if you, let's say, got 1 million in a particular year, and then you paid taxes of 300,000. They will take the 1 million, deduct the 300,000 that you paid as taxes, and then you pay the taxes on the balance. So that basically usually depends on country to country basis and the kind of agreement Kenya has. I can see Patrick saying that churches are next, or tithes and offerings. I hope not. I really do hope not. I really do hope not. Yeah, keep the questions coming. I'd like us to look at a case study. I'd like us to look at a case study, and I hope we're going to learn something, because the case study is not formulated from thin air. It's actually a case that was in the High Court. So, and we've tried to simplify it as much as possible so that we can bring the point home. So this is the thing. The guy said, "Dear Kiere, man, these bank deposits were not my salary." So imagine this. Kiere looks at your bank account. See, wamekupatia review notice, wamekupitia bank account. Ukawapatia. So Kiere looks at your bank account and anasema, wow, hey, kuna pesa inaingia hapa. This must be income. Then you as a taxpayer unasema, ai, hapana, not at all. Pesa yenye inaingia hapa, some of them are loans, some of them are transfers, some of them ni pesa ya matanga, some of them ni pesa ya hospitali. Then Kiere anasema, okay, ni sawa, haina shida. Please show us. Demonstrate. Hapo unanyamaza kwanza. You know what? You have just recreated this entire case. So umenyamaza. This was the case for Roniam Construction. And this was a ruling from the High Court. So Roniam Construction was audited by KRA. It is actually a ruling that was made earlier this year. So KRA noticed a lot of money flowing into the bank account between 2018 to 2021. So what does KRA do? It does what KRA does best. It uses the banking analysis method. A banking analysis method usually assumes deposits is equals to income. After they do that, they give a very hefty assessment. Yeah, VAT yake ilikuwa 47 million. So if 47 million ni 16%, pia kuna income tax ya 30%. So what did Roniam do? Roniam objected. While you object, the assessment was confirmed. Wakienda kwa tribunal, they lost. They felt very aggrieved, wakienda kwa High Court. Guess what? They lost again. The core tax issue was, are all bank deposits taxable income? Of course, no. But in this case, yes. Why? Because you did not prove otherwise. The bank analysis method, okay, basically KRA's favorite shortcut. This is how it works. They look at your bank deposits, assume all of them are income. They tax them. So unless you prove that this is a loan, this is a transfer, this is a capital injection. So Roniam, according as far as they could, to the best of their ability, they tried to argue this. But they forgot one small thing: evidence. You do not demonstrate without evidence. So Roniam's argument, okay, which basically sounds very smart in theory. They say that KRA handpicked bank deposits. And in the bank deposits, not all deposits were income. And then number two, when you find your banking method, wali apply vibaya. So inamaanisha si baada ya kupata explanation yetu, the burden of proof should be on KRA to prove that whatever we are saying is not true. So KRA's response, which was very stone cold and very simple, where are the documents to show whatever you're saying in theory is true? Number two, hata records zenye umetupatia They are not all of them. They're just partial. Hakuna invoice umetupatia, hakuna ledger, hakuna contract between the director and the company, unasema ni injection. So it provided us with nothing. So basically that is why they disallowed the objection. Or rather they confirmed the assessment. So when you're in the koti ikawambia, yeah, we get you, but you can't fight tax assessments. You cannot inshallah your way through tax assessments with just vibes and arguments. It has to be evidence. So these are the tax implication. Bank deposits can become taxable by default. If you do not explain them, of course, KRA, they are more than willing to explain them for you. VAT exposure from turnover reconstructions. So kutakuwa na, when they reconstruct your sales, when all the deposits have been equated to sales, then what happens? VAT or automatically. Number two, as far as income tax is concerned, if they disallow your expenses because you cannot prove them, then that is high taxes. No invoices, no deduction, that is basically higher taxable income, higher taxes, both income tax and VAT. And then there is massive assessment based on estimates. KRA is allowed to assess to the best of its judgment, not to the best of your judgment, not to the best of the law's judgment, but to the best of the judgment of the person handling it. Because you'll find most of the time they are protected by law. So to the best of their judgment, they can do an assessment. So these are the risks in this case. Number one, it was the documentation risk, which is basically a very silent serial killer of businesses. Rhodium provided partial records. They did not provide bank statements even in the tribunal. There were no supporting schedules. So the case collapsed instantly. Number two, banking analysis risk. If your accounts are messy, if there are a lot of inter-account transfers, if there are loans, if there are personal and business mixing, then if you do not prove them, KRA will treat all of them as income. Number three, we've got the burden of proof. Because basically what Oronian thought, once we explain, KRA must prove otherwise. But the court said, no, you must prove everything first. The burden of proof is on the taxpayer as far as these reviews are concerned. The only situation whereby the burden of proof is on KRA is when there are allegations of fraud, is where there is allegations of tax evasion. Then that is where, because basically those are criminal proceedings. That is where the burden of proof falls on KRA. Otherwise, all other assessments, all other reviews, all other audits, the burden of proof is on the taxpayer. Another risk is failure to be audit ready. That basically means you do not have ledgers, you do not have invoices, there are no contracts, hakuna breakdown in expenses. Basically, there's no defense. Basically, you can't defend yourself. And most of us, especially at informal retail, KRA, they ask you for these documents, then you say, mimi sina. Mimi biashara yangu bado ni kienyeji sina. But do you know that that is not a defense? That is basically you inviting KRA now to assess you to the best of their ability, to the best of their judgment. That is no defense. So these are the lessons from this case. Number one, not every deposit is income, but you must prove it. Number two, bank statements without explanations, they become taxable income. Number 3, the burden of proof is not a shared responsibility with KRA. Sawa? Number 4, if you don't document it, then by law it did not happen. Number 5, the banking method is very legal, but also very dangerous if you are disorganized. Roniam basically told the court, KRA misunderstood our banking deposits. The court replied, okay, yeah, we are sure they did. Hii ni ukweli kabisa, hii ni ukweli. We do not disagree with you that they did. But then again, you didn't help them understand either. So this case proves one painful truth. In tax, silence plus missing documents equals to an automatic assessment. So if you have not heard anything else in this webinar, please go home with this. In Kenya today, your biashara can survive competition. It can survive inflation. It can survive the massive power blackouts. It can even survive the Nairobi flash floods. But surviving a KRA audit without records, hiyo ni miracle yenye hata sisi auditors tunaombea. For those of you who have ears, I hope you've heard. For those of us who are waiting to say that watasort KRA ikikuja, we will be more than willing to help you out when that time comes. But the earlier you engage your tax experts, the earlier you put your house in order, the better. In conclusion, if you'd want to contact us, if you want to reach out for us, we are located in Westlands, Gate 83 at Westlands Road. Please, for any query, please contact us. And these are our details. And in the chat box, my co-host is going to, of course, put our contact details. And these are our services. These are our tax services. We do health checks, we do refunds, we do planning, we do representation to KRA, we do the KRA audit processes, we do trainings like the ones I have done today. Also, there are some comprehensive trainings. We do health checks. Please, how healthy is your business? There is currently we are running on an offer. So please reach out to us and let us help your business go through these trying times as far as taxes are concerned. Being the audit season, we do comprehensive audits. We do the statutory audits, internal audits. We do forensic audits for those of us who want forensic audits. Yeah, Noted does that. So please reach out to us. We also do internal audits for your businesses as outlined here. We do them quarterly, we do them on a monthly basis. Also, we do advisory services that ranges from financial management to transfer pricing agreements. Please reach out to us for any advisory services. As I've said during the webinar next week on Friday, from 10 to 12 a.m., from 12 a.m. to 12 p.m., we are going to have another powerful webinar, which of course, we being really concerned about you, it's going to be a free webinar. This will be questions to ask your auditor before filing your returns. Even if the auditor is the one filing your returns, please ensure that you have all the answers to all these questions that you are going to tell you, that you are going to list for you to ask your auditor. Please, let's do that. And also in August, from 5th to 7th, we're having a taxation masterclass. So we are going to have a 3-day event of a comprehensive masterclass of taxation. It's going to run for 3 full days. We are going to cover all the taxes. We are going to cover all the triggers. We're going to cover all the tax planning strategies. Please join us. So I can see most of us are in the comment section saying that it's been very impactful. Can you imagine now 3 days of this from morning? We usually run from 8 a.m. to 5 p.m. for 3 days. How impactful. If you feel like you're so far away, there's an online training that is usually from 7 p.m. to 9 p.m. in the evening. We cover the same content, but it's going to run for 2 weeks. That is, the charges are 25,000 for the online and 50,000 for the in-person. Also, we have another masterclass for audit and bookkeeping that will be in October from 7th to 9th. How well are your books being audited? How well is your bookkeeping being done? To avoid future issues, please ensure that you join this audit and bookkeeping masterclass to avoid basic errors that are going to bring problems with KRA. Finally, we have a system called My Accurate Books. This is a system that was developed by RWK because we have seen how businesses struggle to comply with KRA and how businesses struggle to keep their records. So this is basically a classic act of having an inside person giving you answers to all your problems. So we have integrated all the loopholes. We have looked at all the loopholes that current systems have, and we have developed a system that is very easy for those in the retail, for those in the informal sector to use to keep your records, so that in future usikue kama Ronium, in future usikue kama these cases that we find KRA asking for documents and records that you do not have. So to help you understand this, I will invite my very able colleague who is in the software department to take us through in the next, just allow us the next 5 to 10 minutes at most, to take us through that system and help us understand how it does. Please, on the other side, Karibu. Let's just wait for around 5 minutes to see how it works. Otherwise, it's been very impactful, and I hope to see you soon. And I hope your questions have been answered. And yes, the recording is going to be shared in your emails. And yeah, I hope we continue engaging in this platform. Thank you so much, and have an amazing weekend as we ponder over the taxes and the finance bill. Asanteni.
Hello, good morning. My name is Mary, and I'll be taking you through the system, through the accounting software, so that you can see how it helps businesses automate their daily operations, manage finances, and generate real-time operations. So when once logging into the My Accurate Books accounting system, the first thing one sees is the dashboard analytics. The dashboard analytics, it's a summary of how the business is doing. So here you get to see your sales, your expenses, and the purchases, and here you get to see your profit and loss. So this is a presentation of just how the business is doing, and you can be able to filter whether you want to see the reports for monthly, the summary for a week, the summary of just one day. You can be able to date range here. Let's say you just want to see for today, you'll filter the start date and the end date, you apply filter, and you can be able to see the summary of the sales, the expenses, the purchases, and the profit and loss. So the first thing when to be able to use the system is to input what you sell, whether it's products or it's services. So inventory, you click products and services. As you can see for me, I already have some products. So you can be able to input whether it's a product or a service, or you either have raw materials, you can be able to input them to the system so that you can be able to track them. Another one, you can be able to do stock check using the system. This is where you can download a file here so that now you can see the physical stock that you have in the shop and the stock that the system has so that you can see the variance. One other thing, you can be able to make sale using the system. This is to generate either receipts or invoices for your customers. So for the receipts for the customers who pay immediately, and for the invoices for the customers who have debts for you, so that you can be able to track your debtors, the customers that have debts. Also in the system, you can be able to manage customer. You have customer management where you can input your customer details to the system. All you need is the first name, the last name, and the phone number. In this, you can generate whether it's the receipt or the invoice with the name of the customer. You can also be able to create quotations. If you do quotes for your customers before you sell, you can be able to create quotations. Another one, you can be able to manage expense. There's the expense management. You can be able to record all your expenses that you incur around the business, whether it's rent, utilities, transport for those who do delivery. You can be able to account for all your expenses. So with those three now, the system will be able to generate reports for you. Reports like profit and loss. You'll be able to see the profit that your business is incurring in a day or in a month. All you need is to filter, but you'll be able to see it here with the expense summary, the expenses that your business has incurred. There's also the customers report where you can see your debtors. Debtors are those who have credit. You can be able to see them here and the money that they owe you. You can also be able to track creditors. Creditors report is for you when you have a credit from your purchases. When you buy new stock from your supplier and you take it with credit, you can be able to track how much you owe to your suppliers. Another one is the sales report. You can download the sales report to see how your sales are ongoing you can be able to download it as Excel or PDF to be able to see how the system has generated for you according to the sales that you recorded into the system. Another one is the user management feature. The user management, you can be able to add your employees into the system. This is for them to sell using the system so that now you can be able to track sales, whether you are in the shop or not. You can be able to track the sales wherever you are because they are using the system to sell. But in user, you can be able to regulate the rights. You can be able to regulate the rights for them to see what you have given them as permissions. And now there's the branches. Branches, it's if you have one or more shops, you can be able to manage all the business records in just one system. Whether you have a hardware and then you have a beauty shop, you can be able to have those two branches in one account. And all you need is to switch now and you'll be able to see reports in each in different shop. It has its own reports. So with that, that's the system. That's a summary of how the system is, and I'll be free to answer any question. My co-host will share the details of on how to get in touch with us if you have any more questions. For now, we are not integrated with eTeams, but you can be able to store your business records. You can say whether the products are vetted or not. There's a way you can say whether your products, you want them to be inclusive or exclusive of tax. On the system, kindly check on the totals in the aging receivables. Only the current amounts are calculated. Yes, we will check on that. So for the cost of the system, we have two packages. There's the standard package and the gold package. The standard package goes for 500 per month and the gold package goes for 800 per month. The difference between them, so the standard package is 500 and the gold package is 800. The difference between them is that the 800 package has the accounting reports and it has the multi-business management. So the initial installation cost, the system has a mobile application, and whether using a laptop or a desktop or an iPad, it has a website. So the website, you just use your browser and search My Accurate Books, and you'll be able to access the system. For the mobile application, you just download from the Play Store and you'll have the system on your phone. So there's no need for installation. It's just the website and the mobile application. The only part that you pay is when now choosing a package or subscribing to the system. So the number there is the one that if you have any more questions, you can call or text and we'll reach back to you. So thank you for attending the webinar and thank you for listening to me.